Welcome to the Passive Income Podcast. Please be sure to subscribe, whether you're watching on YouTube or listening on any of the audio platforms. Please subscribe so you don't miss any of the incredible upcoming guests. And please welcome to this episode, the Dividend Dog. And thank you so much, Dividend Dog, for coming back again. Just
Oh yeah.
briefly, I will say I think some of you know that Dividend Dog and I did record a podcast, and for some reason we had some technical issues. The file was corrupted, and I was never able to upload that podcast. So I appreciate you so much for coming back on again so soon. I'm going to throw it over to you to give yourself a brief introduction and just have at her, bud.
All right, awesome. Well, Dave, thank you again for having me back onto the show. My camera is here, but my screen is really here, so I'm going to focus here.
Yeah, that's cool.
Dividend Dog, and I'm just your basic 9 to 5 investor. And what I do is I just take a portion of my check and I invest it in companies that, in return, pay me a dividend either monthly or quarterly. And I take that and reinvest it back into the market and let compound interest um, do its thing over time. Now, I am a long term investor, so my long term horizon, I would say, is 20 years minimum. So I'm
Nice.
30 now. I'm obviously guaranteed more likely going to be working until I'm in my 50s. So
Yeah.
my my thing is, why not take a portion of my check and put it into the market instead of spending it like I used to and continue to be basically in a hole and not knowing, like, hey, maybe one day, working, may be optional. I don't say I want to retire fully, but I want to become more so a work optional thing.
Work optional. Work
Yeah.
optional was one of the earlier terms from Dividend Daddy, one of the second or third guests on the Passive Income Podcast. And I heard that term and I was like, work optional. That is such a brilliant term. Is like, I can opt when I want to work, how much I want to work, who I want to work for. And I think work optional should be the goal because it does still give you something to do when you're in your 50s, 60s, even early 70s. You still need something to do, right? And
Right.
something and feel like being a productive member of society, but you shouldn't feel like you have to get up every single morning at whatever time, whether it's 5 a.m., 6 a.m., and grind that, 8 to 5, 9 to 5, 9 to 6, whatever hours of the day you're working. Or I know a
Right.
lot of people that are working, 8 to 8s and like working 12 and 14-hour days. And it's like
Hmm.
by the time you're 50, 60, you don't need to be grinding those type of hours.
No, that is not the goal. The goal is to work to work less, because
Yeah.
the goal is to be a family man. So that is, that sounds just basic, but there's a lot
Yeah.
to go and tell with that. So that's, one of my main goals too.
So you definitely have time on your side. I think you just said you're 30. I think I remember that from the past that you're
31 now.
yeah, not you're not like a kid, not super young. You're obviously an adult, but you still have the time on your side
Yeah.
of you have that 20 years, even 30 years between that ages of 50 and 60. And we
Right.
know and then going back to what you just said about investing in those dividend paying companies, reinvesting those dividends back into the market to continue to build that passive income over time.
Correct.
Yeah. So
Oh, I'm sorry. Yeah, no. I mean, that's my main goal, and basically, be able to go in and evaluate companies is the fun part, and
right.
you know, engaging with everyone on Twitter, like everyone like yourself and everyone. So, and the community, I feel, is growing every
Yeah.
day, because right now the market's at stupid all time lows.
Well,
Thing is, I mean, it's cheap to start investing. It's the cheapest it has ever been to start investing right now.
yeah, you can really if you've already invested like most of us have, you can really dollar cost average down on a lot of things, on a lot of different companies. And like you said, it's a
Yeah,
great time to start. Well, it's always a great time to start. You gotta
always.
get started, right?
And you
But
gotta
it
get
is a
started.
great time to start because so many. companies are basically on sale, right?
Mm-hmm. And go back to branch off of what you were saying about DCA, dollar cost and average. That's like what I like to do. I like
Yep.
to take, you know, $25 and say, hey, I'm gonna go buy $25 worth of
X,
VTI,
Y, or Z, whatever it
or
might be.
$25 of Tesla, $50 of this and that. You don't have to go out and buy, for anyone that's new out there, you don't have to go out and buy one share or a complete share of a company at for that price. You can buy partial shares of a
Yeah.
company and still be able to have your say in the stock market and money still growing for you.
And even to add to that point, like you said, if you have the $25 and you and say it's some random $6 stock and you buy 4 shares, you don't have to
Mm-hmm.
go and buy 100 or 250 or 500 shares. You can go and
Nope.
buy that 3, 4, and 5 share, which some of my more recent podcasts and even talking um, off recording time, I've said to some other guests, like, times have changed, right? You know, we now can do this all from our phone on an app where, back in the early 90s, we didn't have the internet. We didn't have
No.
apps on our phones. We
Nope.
had books in a library, and you'd have to go to a if you wanted to buy something, you'd go to a stockbroker and they say, "Oh, well, the minimum order is like $10,000 or
You had to
10,000
buy
shares." And you're like,
people
"Oh,
putting
whoa."
shares.
Right?
Yeah. So
And literally now you just go and buy either 1 share or a partial share or 5 shares or whatever it is, whatever happens to be, right?
they make it, yeah, and they make it so easy in so many ways. You have Acorns. You can have that hooked up to your checking account, where every time you swipe your debit card, that
Yep.
those like rewards will go into an ETF fund that grows for you over time. So for those who don't say, hey, I don't have the $10 or whatever to get started,
Yes, you do.
that's an easy
Right?
way. Yeah, well, yeah. Obviously, yes, you do, but that's an easy way to start there. That I use that to have, I don't know, I call it petty cash in case I need it.
Yep.
I go out and need some cash, so it's like right there where I don't even see it. But for those who don't want to invest, but that's an easy way for those that little coins there. It adds up.
That's cool. I don't have that option on my banking, apps, but I would love to have that
It's
there.
a separate app called Acorns.
Oh, okay.
Mm-hmm. Yep,
I'm not sure if
and
that's available in Canada because obviously sometimes there's different things, that
gotcha.
are
Yep.
and are not available between the US and
Oh,
Canada, so
okay.
I'll look into that and I'll let you know.
Yeah, for sure. Yeah, it like I said, it's I've had it since like 2017, 2018.
Nice.
I At one point, I remember, I think it was like 2019, maybe just starting, and I needed a tire at the time, and I wasn't obviously like investing into the stock market like I am now, but I
Yep.
knew of the stock market, so I had that there for me, and I was like, oh wow, I forgot I had that there, and pulled it for like an emergency. They're not supposed to do that. But I still had like a mentality at that time to I need to start putting something away,
Yep.
for the future or a rainy day. Obviously that rainy day came, but
Yep.
here we're investing. But it can go both ways for anyone out there. So
Nice.
yeah, but it's a pretty cool app, and they do the automated investing. They do all the investing for you based off of your trajectory of you want to do like short term or long term or whatever.
Cool.
Mm-hmm.
Cool. Yeah, I'll definitely look into that to see if it is available in Canada and let
Okay.
everyone know.
Yeah.
So I know on the past podcast we've kind of talked about different sectors. Um, I guess let's just go over a few of the different sectors and see where the
Yeah.
conversation leads us. I do definitely want to get back to. I know you're in the southeast U.S., Georgia, I
Yeah.
believe, and I know
Georgia.
that you just had a trip to the Pacific Northwest as well.
Yep. Or Seattle. For work. Yep.
So, sorry, you said you are in Georgia, correct?
Georgia. Correct.
Okay, so cool. We'll get back to that in a minute. So, uh, obviously, we chatted pre-recording. That's some very interesting conversation that you're going to want to stick around and listen to. But I do want to just kind of quickly go over some of the different sectors that we've talked about on different podcasts. On the original podcast that you and I recorded, that unfortunately never was able to get uploaded. Um, REITs, I guess, as as you probably know, it's one of my favorite sectors. I hold several of them, and if I recall, you had O or you have O on your watch list. O is a very popular REIT among American
Yes.
investors.
Mm-hmm. Yep. Realty income. I have a couple shares of it in my M1 portfolio that I've had open for quite some time. I just haven't really been throwing a lot of cash in it. But since now
Yeah,
that I am pivoting towards paying more debt off, I am going to be using that to help deep dollar cost average into plays. But realty income is in my REIT pie that's on M1, so it is everyone's favorite monthly dividend income. Um,
hold
I mean,
tight.
they basically are responsible for buildings like Lowe's, Taco Bell's, Starbucks, Walgreens, CVS's. They own the Home Depots. They own those type of buildings, and
Right.
basically what a REIT is, it's a real estate investment trust. By tax
Yep.
code law, they have to pay 90% of their income to investors in form of dividend
To the shareholders.
to the shareholders as a form of a dividend. And Realty Income has done that monthly for the past. Oh man, let's take a look here. I don't want to.
Yeah, sure. While you're looking that up, I'll just kind of briefly.
I'll share the screen here, and we'll go to
Yeah.
Seek Alpha. Let's do it here. There we go.
So, as many of my listeners, viewers know that RioCan is my favorite REIT. It's more or less a Canadian equivalent or very similar. On several of the RioCan properties, there are also the types of properties like your Home Depots and Starbucks and other chain restaurants, movie theaters, other retail stores. Oh wow, 60-49. That's as of close today, I would
Yep,
say.
60-49 is a close today. Down year to date, we're down 15%. Ratings right now, given it's still a strong buy. Obviously, this is not financial advice to anyone out here. It's just
Yeah.
only. But
Exactly. Not financial advice, just two guys talking about the stock market,
yeah,
talking about passive income.
yeah. But if I'm saying if red is green, I like green better than red in this case. So we can move forward with that rating. But
Yeah.
they're giving it a strong buy, and this is Seeking Alpha here. I have obviously no affiliation with them, but I do have their premium service, and I can go in and basically dissect the stock. And this is basically my favorite thing to do.
Cool.
So this is what I do. I would go through and basically just look at any analysis on the stock. I'll look at the hold article. I'll look at anything as far as obviously regarding to buy. Obviously, I'm going to read that first.
Yeah.
Um, One cool thing that I like, obviously, once I get through reading this and dissecting it, obviously, I know what realty income is, and I can break it down to you guys a little bit further here. But I like to go into the comments here and just see what other investors what they're chiming about, and
Yes. What
it
other people
helps.
think.
Yeah, what other people think, and it gives me an I was calling
Sure,
it
it gives you
education.
perspective, other
Yeah.
people's thought. Honestly, that's exactly what the passive income podcast is reaching out to other investors and listening and hearing what their thoughts, opinions,
Hmm.
ideas, everything like that. Just other people because everybody has a different perspective. It's not all about that's why I'm kind of loving what I'm doing right now is talking to
Right.
so many different people and getting so many different, like I said, ideas, thoughts, perspectives, etc.
Hmm. Yeah. No. And I like dissecting, with others as well because it just helps gives you that educated guess on if I should be buying this or not. Um,
Right.
and the more that you got and more that you put yourself out and put the effort into reading and trying to getting that 1% better every day, in the
Yeah.
market, and getting 1% a day is it takes me, I would say, 10 minutes to to go through this article, scan it, and
Yeah.
get an idea
Why
of
realty income is oversold, and it said it would did it say it dropped from 75 down to 68 there?
Mhm. And one cool thing about Seeking Alpha,
55 actually.
yeah, and it gives you charts. They authors, they do a really great job of putting the charts in here.
Cool.
Giving you a great analysis on their trajectory of of the stock.
Nice.
Now, when I go back and say, all right, cool, do I want to invest in realty income? I'm like, all right, let's take a look here. I'm a dividend investor, so this is
Yep.
my this is where I'm going. This is the beat of my heart drum here. So I
Well,
got to make sure
exactly.
everything
Show
is
me the money, basically, right?
Mm-hmm. So I go straight to the dividend summary because these ratings, they fluctuate up and down. It changes.
Yep,
Some,
of course.
all right, it's here, there. It's like
Sometimes they're
sprinkles.
good, sometimes they're
Sprinkles,
bad,
yeah,
but
it's like
again, going
sprinkles
back
on
to
top
that
of my.
dividend summary, show me the money.
Yeah, it's like sprinkles on my ice cream. Some days I want it, some days I don't. It's there. Um, but I look straight for the dividend yield. I go just to check. Now me, I like anything between 2 and 5%. Those are like gold mines for me.
Yep.
Those are great starters. So I'm like, all right,
So
cool.
that's your comfort level.
Yeah, so I'm comfortable. I know based off of research and based off of what I've been reading, to anywhere between 2 and 5%, you can sleep at night because that's the goal.
Yeah.
Not to really worry about looking at the market every single day. The more and more I invest, the less I'm going to be looking at the market. That's my goal. So
Right.
once I check that off, I'm like, all right, cool. This is good. How much are they paying me out a year? So annual payout. So per every $60 or whatever the price of the stock, they're going to give you $2.98. Awesome. So I'm like, all right, cool. So every
Yep.
time I give realty income $60, they're going to give you as the investor $2.98 back a year. Now we're going to break that up
Yep.
monthly. So I think that comes out around 12 cents, maybe 12 cents.
Yeah, that's pretty solid.
Yeah, around like 12 cents a month. Now I understand. You,
Yeah, if
you,
it's
you
12.
think like, oh man, what am I gonna do with the 10 cents? You're gonna take that, reinvest it, and the next month they'll give you a little bit more the next month. But in the meantime, the goal is to by that time put a little bit more in to get a little bit more back. And by that time, they're going to give you that same amount back as well. And that's how compound interest over time with growth will
Yep.
take into effect. Now, the payout ratio, it's over 100%. Now, if it was a normal dividend stock, I would be like, no way I'm investing in this because it's obviously is over
Right.
100%. But with REITs, their payout ratio doesn't matter. It's all about the AFFO, after funds from operations. So once that is the number that you look at for the payout ratio for real estate companies.
Yep.
5-year growth rate. Now, me as a dividend investor, this is cool. That means, yeah, your money's growing 3.94%. Um, you know, every 5 years. There are some dividend companies. My threshold is 10% or 9%, at least 9% and above for 5-year growth rate.
Yep.
That means that my money's keeping up with inflation over that. So older I get, I know that my money is keeping up with inflation. And then obviously we're going to move over to the dividend growth, meaning that, okay, cool. Now every year that I'm invested into the realty income, they're going to give me a raise.
Yeah.
Now that is the coolest thing about dividend investing. You get raises. Today, just got
And
a
you don't have to ask
15%
and
raise.
beg for your boss about getting a raise. They just give them to you. Right?
Yeah, today. Yep, today. Perfect example. Energy transfer. We'll talk about it here soon. Just did a 15% raise on the dividend, and that's my second biggest holding in my portfolio. And I just got a raise for I'm just sitting here.
Yep.
We're you know So, I take that into consideration. So, 25 years of dividend growth is great. I look for anything over 5 years, or even a company that's just getting started, um, for the dividend, that's starting there for dividend growth for the second or third year, or a company that just cut their dividend, pre-COVID, like Energy Transfer.
Right.
Um, Now you can take a look at a company like that say, hey, they cut their dividend. May want to stay away. Yes, that is absolutely correct.
But quite
But
often too, on those dividend cuts, if you haven't been invested in them, you can look at them and say, because quite often what happens when the dividend cut happens is the price of the stock goes way down, and you're like, "Oh,
mhm,
is this a good time to jump in now?" Because over time, maybe that dividend will start giving those raises back, and you'll get back up to whatever they were at.
correct, and
That's
that goes.
again another just a thought. I'm not trying to give financial advice. That's off the top of my head, off the cuff.
Oh, right. I thought you were going to say something else, but yeah,
Sorry, yeah.
no, you're good. And that just goes to attest with Energy Transfer. Hold on, let me get my screen back up. There you go.
Oh, sorry, I took it off. Did you want that up there still, or
Oh, no,
are
no,
you looking
no,
for
no.
another
Oh, I'm
screen?
sorry. I thought it had faded away. No, no, no. We're good. We're good. But that
Okay,
just
cool.
goes back to test with the Energy Transfer on doing the research. Now, I read back in April of this year that on their last earnings call that management is determined to get the dividend back to pre-COVID levels.
Right.
So
So
I'm
again,
like,
that's kind of to my point. What I was saying is like
mhm,
sometimes if you see a dividend cut and you're not in a company, maybe that's the time to get in because the price has probably dropped. It usually does when the dividend gets cut, and as they work their way back up, two things happen: that price is starting to work its way back up, and the dividend is starting to work its way back up. Again, this
right.
isn't going to happen overnight. They're long term
No,
holds, and I'm not talking about any one specific stock. I'm kind of talking in overall broad picture.
right. And dividend investing, the number one of the number one things is patience. Or one of the
Patience,
top five things on my list is patience.
yeah.
That patience
Top
is
three,
the key.
move it up. Top three.
The top three, top three, you have to be patient. Even when you're day trading and option swing trading, you have to be patient there too, even though that's a fast moving thing. You know,
It's a different type of patience, but dividend investing is the long term patience, right?
yes, the long term patience, and you have to enjoy doing the research on your company, and staying what's up on the market, and there's always something new every single day to learn on in the stock market every single day.
Yeah. So another sector I want to jump into is banking and financial. You may have seen some of. I'm not sure if you've seen any of my recent podcasts, but I've put this same screen up now for several episodes in a row, and it really just shows the strength of the Canadian banks. Can you see that? Is it up?
Yes, I see you there. I see you there.
Yeah. Okay. So Bank of Nova Scotia has been paying a dividend since 1833.
Okay.
CM, that's CIBC, Canadian Imperial Bank of Commerce, has been paying a dividend since 1868. BMO, Bank of Montreal, has been paying a dividend since 1829. Well, you can see the rest. Royal Bank since
Yes. Oh my
1870,
goodness.
Toronto Dominion since 1857. So the oldest one there is Bank of Montreal. In 7 years' time, in 2029, Bank of Montreal will have its 200th year anniversary of paying a dividend.
That's crazy.
I was going to say, what are your thoughts on the longevity of those dividend payouts?
I'm screaming and wagging my tail as I say,
Go, dog.
no,
Wag that
go,
tail, dog.
good. No, but no, this is crazy. The consistent on the dividend
Yeah.
payments. That just goes to show, by the banks.
So it looks like the
This
youngest
is
one there is Royal Bank at 1870. So in less than 50 years from now, so basically they're all over 150 years old of paying dividends, but in 48 years they will all be they will have all surpassed a 200-year anniversary of paying dividends.
Yep. That's
And for our American viewers and listeners, I'm quite sure most, if not all of these are available on the New York Stock Exchange as well. I'm
they are.
positive. Yeah,
I've looked at BNS. I've looked at BMO. I've looked at those. I've recently purchased Bank of America.
right. Cool.
I got into there, so I was
And has
definitely
Bank of America been paying a dividend since 1829?
don't think nah, nah, not even.
Actually, that would be interesting to find a chart like this for the American banks. And again, thanks to at Settling Nomads for this tweet. I've used this tweet many times now in podcasts just because it's extremely impressive, right? Like,
Yeah, no, this is definitely impressive, and this should be on everyone's watch list
yeah,
to snag these, because I mean you got to realize the stock market is down price wise. Just it's Mr. Market's just beating up everybody, so you still have to go in and see the value into these companies,
right.
and obviously the dividend yields and the the amount of time,
Longevity,
the longevity of dividends, none of that changes. So that
right.
is cemented into the company. So you have to get through the prices of the market to see this, and this, I would, I would snag some of these up.
Yeah.
you know,
Again, not financial advice. I'm not trying to convince
Financial
you to buy
advice.
Canadian banks. Um, we should mention that these are relatively expensive stocks as well. They kind of all range somewhere in that. I think most of them are over 100 Canadian dollars, so probably somewhere in the 70 to $80 range per share. So
Okay,
obviously, if you want to buy 10 shares, it's going to add up real fast, right?
right. Yep. It does add up quick, but it goes back to dollar costing average, and
Yep.
hey, I only have $25 today. Let me go get $25 of BNS or buy 25 of CM or
Right.
BMO.
Right.
Um,
Right. Yeah. I just I can't stop sharing this tweet just because those numbers are so impressive.
no, that's a very, very, very impressive list. And not like I said, we're not giving financial advice. That's a good one to keep home in the portfolio or on the watch list for sure.
Yeah. Exactly. Moving right along, another sector to talk about. I guess pick your poison. Do you want to talk about energy? Do you want to talk about telecoms? Do you want to talk about healthcare, technology? Well, we'll save technology till we get into what we're going to talk about in your Seattle visit and what we were talking about pregame here. But
Okay,
energy, telecoms, healthcare, consumer
let's
staples, any of those categories, anything you want to talk about in any of those sectors.
I've been on a craze of buying a lot of telecom lately. So I've been loading up on some Comcast, been loading
Yeah.
up on some AT&T,
So did
and
I hear that Verizon is Verizon now part of Comcast? Like, did they buy that, or was there a merger, or was there something to that effect?
Verizon did do a merger. Here, let's look it up here.
Okay, because again, this is going back to I had another guest and we were talking, and the same thing has happened in both Canada and the U.S. where you have these top three telecommunications companies. So in Canada, the top three are Bell Canada,
Hmm.
Telus, and Rogers, whereas in the U.S., obviously the top three are AT&T, Verizon, T-Mobile. But they become more than just telecommunications companies, they become media companies as well.
Right. Yep. That's and what was you say? What was the first one again that you had mentioned?
Of the Canadian companies or the US
Yeah,
company?
the Canadian ones.
Bell Canada.
Bell. Yeah, yeah, Bell Canada. Yeah, I remember we talked about that on the last time we had hopped on the
The last
podcast.
time we recorded a podcast that we couldn't upload.
Oh my god, yeah, I remember Bell. I remember you
Yeah,
mentioned.
so yeah, Bell's a really interesting case study. It's definitely the oldest of the three. It's been around the longest. And yeah, I do full disclosure, I do own a couple shares of Bell Canada. I definitely want to dollar cost average more into them. Um, oh, I lost my train of thought there. Let me hop
Oh
back
no,
on the
no, you're
train.
good. You just said you got into you have some shares full disclosure. You got
Yeah, I have some shares in
some shares.
Bell. Bell is the oldest
Yeah.
of the 3 in Canada for sure, but they definitely
Hmm.
have become more of a media company. Oh, well, there's Bell Media. They own, um, like, different cable stations. I'm not even sure which ones it is, whether it's, Sportsnet or the Sports Network, and they own a variety of different, media companies. So, and obviously every telecommunications company now also has their mobility division. Like, we're all on our cell phones all day long, so that's kind of a given as well. Bell
Yep.
is a very strong company. All the communications companies or telecoms in Canada are strong companies, and I see the same in the U.S. with your AT and T's, your Verizon's, your T Mobiles also being very strong companies. And I see you have Verizon up on the screen here right now,
Yep.
36.43 as of close today.
Yep. Got it at 36.43. I have been in. Oh, there we go.
And
I've
we should
been,
mention too, when you're pulling things up on the screen, it's in US dollars, and when I'm pulling things up on the
yes.
screen, it's in Canadian dollars, just to help add to
Bingo.
the confusion, everyone. Thanks
Yes.
thanks for joining the podcast income
Thank you.
posse.
Thank you. Yeah. Hey, first timers. First timers. Well, first timer for me doing this on the podcast.
Yeah, that's cool.
Yes, this is Verizon. Obviously, just another analysis here on Seeking Alpha. One thing, obviously, I go and look at is the dividend here, and I look at the payout ratio. So,
Yep.
anything below, first thing, obviously, yield is obviously over 5%. Now, I have a reason why it's over 5%. It's Verizon. I know Verizon is tapping into 5G. I know
Right.
Verizon needs they need communications. That's their biggest thing. 5G is the next thing that we're going into, and they're one of the leaders in the game. So with this 7.26 yield, it is paying 261 a payout every year
Annually.
annually. Payout ratio is below 50%. Check that mark for me. Now it is below the 5-year growth rate for me. Now, once again, for me, I have a reason as to why I accept this is because once it's at an all-time low for the company, so I'm going to get some growth out of this. And
Right.
two, they've been run their dividend for 18 years, and I know I'm 20 years minimum into the game.
Yep.
So, what do you think? Let's see, what do you think they're going to do for the next 18 years? They have a lot locked up in for with telecom, with tower companies such as Crown Castle, which we'll talk about here soon. Full disclosure, I'm invested in both Verizon and CCI, for investments. So, going back to what we were talking about with the merger, I do them coming out with a new like video game system. Um, that is, let's see.
And so this was a merger with Verizon and Comcast?
Uh, no. I think they merged it. Never mind. I know they're coming out with like a video game that's that's like gonna have 5G. It's gonna be. It looks like a P. It's gonna look like a PSP Nintendo Switch type of
Right.
system. So that's going to be one way for them to break into the video game the video game industry. That's
Yeah,
another
so that's
industry.
very interesting as well because, you're extending that media company because obviously video games are still media, but
Mm-hmm.
you've gone so far beyond a telecommunications company into
Yeah,
that media
into the media field because I mean
media, yeah, world, field, sector, whatever you wanna call it, right?
that's everything's up in the cloud as they say. So everything's
Well, and
digital.
yeah, media is huge these days because obviously we all consume media all the time, whether it's, whether it's YouTube, Netflix, Amazon Prime, Disney Plus, Apple TV, like the list goes on and on and on. We're all just consuming media content constantly.
Yep, facts. And it's not going anywhere. I mean, that's our
No,
way of moving now. You know, we can order food just from 3 clicks of a button here. You know, so it's
yeah,
that type of stuff isn't fully, I don't think, going anywhere. And Verizon, well, you got to pay your Verizon bill every month, and
yeah.
they're still into the game. So that's one of the companies I've been, full disclosure, I've been buying some shares in, along with AT&T, another company that recently cut their dividend, but management has said that they are stated to to move forward and continue to raise it. And obviously they had to cut it with the Warner Media
Right.
acquisition, so that caused a lot of disruption there. But
You see
AT,
the companies like that, and you know their dividend's gonna get raised again over time, so you know
yeah,
that that's like, going back to my previous point of seeing a company that cuts a dividend, if if and probably the price did go down, you're like, "Mm, that looks pretty juicy right now because odds are very good. Both the
yeah,
price and the dividend are going back up over the next whether it's 10, 15, 20 years, and as long as you're a long-term investor, you're very happy about things like that, right?
yes, and very happy. Now I'm not saying to go out and to buy these companies, but
No.
what you can do is join, get on the earnings call or look at the earnings report every time they come out every quarter, and analyze it from there, and make an educated guess on, hey, maybe this does sound like something I should partake in, and be able to receive the dividends, and be able to receive everything that is offered by being an investor. So I
Cool.
think it's a need to have some communications in the portfolio, to have it obviously fully diverse if you're an individual investor out there.
Other sectors that we wanna touch on before we get into I hope people are still watching and listening because what what we're gonna talk about, near the end here is definitely the best part of this podcast. I know because we were talking about it before we started recording. But before we get into that, energy sector, consumer staples, healthcare, anything in there that you wanna touch on?
Been full disclosure. I mean, Energy Transfer is hot. It's just got a dividend raise here, 15%.
Nice.
And I, full disclosure, I've been loading up on that since it was $8, $9.
Yep,
And um, another company that cut its dividend, management, we mentioned that previously earlier in the show. Management, once again on the earnings call, has said they're dedicated to get that dividend back to pre-COVID levels. And now, as an investor, I'm, one, going to get the growth. Two, I'm going to get the dividend increases as
nice.
well. So that just makes my peanut butter and jelly sandwich taste even
You're
better.
nice.
So yeah, so, and that's one of the ones that I've been, obviously been doing a lot of research on. And for those who don't know, Energy Transfer is a MLP. They are a middle liability, like, transportation
Yep,
partnership company. So what they do is they do the transportation of the oil and natural gases that we obviously are needed for our
yep.
lights. We actually need to have some products,
Everything.
tires
Everything,
on
whether it's
this
plastic
fan here,
bags to
this,
toothpaste, it's
yeah,
everything, right?
everything. So as an investor, that's a no-brainer to me, because one, I see my product that is
Yep,
being made, so it's like, oh, these are things that will be forever needed. And two, they own Sunoco gas stations. For those out there in northeast area, Sunoco,
yep,
Energy Transfer, they own Sunoco, even though they are two separate companies, but ET owns the whole thing. So every time you go to the gas pump, obviously you see Sunoco gas station. So
yep,
that's the way that I think of when it comes to investing. It may look and sound hard, but it's definitely something where you can say, hey, my Apple phone, I can invest in Apple. So just
yep.
very, that's how I look into it. And another energy one would be XLE ETF. That will be an energy ETF. So for those who don't want to go and individually buy the stocks, You can buy ETF,
ETFs are
exchange
great.
fund, and XLE has the all of the energy companies weighted out. Basically, they do the weighted out for you. That management team with XLE, and they basically take your money. I think it's around $80 a share. Full disclosure, I got in at 70, and I am now up, pretty good amount.
Yep.
Uh, from that. Now, what I have done, I have taken some profits from that, and that money has gone over to buy some shares of AT&T.
No, that's smart. Obviously, right?
Yeah,
Like,
and that's rinsing, and I call that rinse and repeat.
it's never a bad time to take profits.
No, no, because if you don't, the market will take it from you. But
Yep.
obviously, I'm not saying do this every time. I only did that because I was like, oh wow, I'm up a pretty good percentage here. Let me take a little icing off the cake and not take it and putting it in my pocket and go spend it. Let me take it and go make some more because I bought AT&T, and guess what? The yield for AT&T is higher than XLE. So that money that I've taken from the profits of that have gone and made my dividend income go up even higher.
I've
And
done
I,
the exact same thing. I
and I,
did the
have,
exact
I
same
haven't
thing
done
with
anything with it.
Suncor. I lucked out a couple of my past podcasts. I said
Mhm.
I definitely was not trying to time the market. I simply lucked out. I was able to sell a few shares at a nice
Oh
profit.
yeah,
I took that
yeah,
profit and reinvested it into other basically other dividend paying.
and everything's at an all time low, and like, hey man, I've invested a lot. It's like, oh man, I'm like tapping my pockets here. Like, hey, let's go. So
Wagging your tail, dog. Wagging your
yeah,
tail.
literally. And I'm like, all right, fine. I see I'm up, pretty good profit here. Take that and rinse and repeat. Now, AT&T, since I bought it then, that money is up. Now that money's up 2% as
Nice.
well. So taking
Just a
that
matter of
and
time before you decide to take some profit there and reinvest that profit into more dividend paying stocks, right?
exactly.
Rinse and repeat. I like that.
Just rinse and repeat. Let that money that you make work for you on top of that. That's how compound interest starts. And that's that snowball effect. You gotta push it. You gotta push it.
Right. So I'm gonna skip over some of the other sectors that I usually cover. Can you hear my
Okay.
dog on the floor? Did you
Yeah,
hear
yeah,
that?
yeah, you're good. I just heard them. You're fine.
I'm gonna skip over some of the other sectors that we usually go over on the passive income podcast because I know you just got back from a work trip to Seattle. I know you
Hmm.
work in the automotive industry. I know you have a lot of amazing things to say, but obviously you don't say more than you're allowed to say. But anything you can share with us, please. I'm just
Okay.
gonna let you go nuts here. I talk to basically what we were talking about before we started recording, and obviously, we were talking about EVs, electric vehicles, Teslas, Rivians, uh,
Yeah.
F-150 Lightnings, the Chevy Silverado
Hmm.
elect EV. So I'll throw it back over to you and
Okay.
go for it.
Yeah. So when I landed in Seattle, um, I obviously you call your Uber, boom, boom, boom. I'm used to being picked up in a gasoline car, honestly. But as I was sitting in the airport, they have, I don't know if all airports they have like this Uber hangout where everyone goes and gets their lifts or whatever, and
Yep.
it was quiet. I'm like, only thing I
Hey,
can hear is people talking. So, and there's every car that was in there was an EV. I just started looking around, and I noticed all the other cars were. I'm like,
wow.
yo, this is nuts. All right, I'm not thinking none of it. I get in the car and I ask my Uber driver. I'm like, man, you guys are really bought in with EVs. I see. He goes, yeah, man. Everyone here almost has has like an EV. And as we're riding around, get to my hotel, whatever, and I unpack. And I'm like, all right, get some food. Call another EV. I'm like, all right, cool. So get out, go get my food, ate whatever. That's when I had Jack in the Box, first time. Very
Nice.
great. Shout out to Jack in
Yes, it is good.
the Box. Yeah, and call him over back. Tesla this time. I'm like, yo, what is going
Who's
on?
using a
And
Tesla to
I get
drive
into it.
Uber, right? That's what you're
Yeah,
thinking. That's
I'm like, yo,
exactly what you're
what's
thinking.
going on?
Who's driving Uber with a
That was
Tesla?
that was my first time actually riding in a Tesla, and I didn't know how to open the door, so it was pretty funny. I'm like, dude, how do you know so much about like EVs and blah blah blah? And you don't even know how to open the door of these cars. But obviously, when I got in, and I asked him to, I'm like, yo, is everyone out here like bought in with EVs? I'm like, it's nuts out here. He goes, yeah, I love it, and obviously he was mentioning, he loves Tesla and blah
Yeah,
blah blah. Yeah, that's it's and as I was riding around, for work, I just noticed that Teslas, a lot of Camry EVs. Everyone seemed to be bought into the idea that we are moving forward with
so
EVs.
did you see more charging stations than gas stations?
I see more charging stations, but I definitely saw more EVs.
Right,
I That was the state I've seen the most EVs on the ground driving
right,
around.
right. Well, and that goes
Uh,
back to what I was mentioning to you before we started recording. I live in a rural area near a small city, and the small city is maybe 50,000 people, but there is a mall there. And about a year and a half, maybe 2 years ago, Tesla did put in, I want to say, 15 charging ports. And now
mhm.
when I drive by there on a Saturday morning, and again, this is going back to we're on a major throughway between like Windsor, Detroit, Toronto, Montreal. So we are right on a
Right.
main drag. But still, you drive by the mall on a Saturday morning and you see 8 or 10 Teslas parked there charging, and you're just like, you do a double take basically, right? Like,
Yeah.
it's like, wow,
It's
there's that many Teslas coming to my little small city to
to,
charge on a
to,
Saturday morning or any given day of the week, right?
Now here's a cool thing about that there, right? Now there's a company, NIO, ticker symbol, ticker symbol,
Yeah,
IO. Um, they're a Chinese-based company, and their big theme is to have charging, like battery swaps.
right.
So they actually just with Shell gas station. That's the number one gas provider.
Yep.
They inked a deal with Neo, saying Neo will have their battery swap stations at all Shell gas stations here.
Oh, wow.
Yes. hmm Now, what their battery swap stations are, now you would pull your Neo into the battery swap, right? Underneath, there's a system or machine takes your battery out, moves it, places your battery back in, and you drive out.
Oh, so you don't have to
Less than
stay there
15.
for 45 minutes waiting for a charge.
No, it's less than 15 minutes, and you got a whole new battery. It's a battery swap, and they're making it more so over there. It's a whole. If I follow the Neo team on Twitter, and there it's a huge thing over in Germany and UK. Over in China, um, they are making a huge brand. They're making it more of a lifestyle, where you're gonna have like an app, a store, you get clothes, all types of things. The Neo Park over there is
Wow.
huge. I advise people to go out and take a look at that company. Recently, it was at $60. Now it's down nine. I call it the 999 clearance rack. I joke around with it. I'm like, wow, you can get Neo for 999 clearance now. It's crazy.
Seriously,
But
it's a $10
the,
stock and it was 60?
it's a $10 stock, and their biggest thing is that battery swap. And I think when they come here, not saying I'm guessing or saying I've stock, but I think when they get here in 2025, that's their estimated target date to get to
Yeah.
US. I feel like they're going to have a huge following overseas. That's going to trickle here into the social media digital feed here.
Yep.
I think once people see that, oh wow, I can just pull into here and I don't have to get out my car and charge. I just got to get a battery swap, and they have it where you will get. It's more so a program to be a part of to be able to get the battery swap, and I think they have that all integrated into the price of the car and
Right.
everything like that. CEO.
Already that sounds more appealing because obviously, you pull into a gas station, you fill up with gas, and you're gone. 5 to 8 minutes, right?
Yeah.
You're gone.
Hmm.
Whereas with EVs, it's like, "Oh, I've gotta park for an hour while my car
Yeah.
charges."
Yeah. It's here. Mind if I share screen one more time?
I think we can, yeah, we
Do
should
we
be
have
able to do
time?
that.
Here, I just want to pull up just some Neo cards for the viewers out there who's never seen them.
Um, is it this screen or are we still on? Oh, you're on Google,
Oh,
Microsoft
yeah, there we
Bing.
go. There we go. Oh, that's not giving me anything I
Oh,
want.
no, I did that, sorry.
Oh, you're good. You're good. I mean, obviously, team, where this is not financial advice, but seeking alpha in Wall Street, I mean, blood is in the street out here. And this poor stock is it's taking a
Yeah,
beating.
1063 as of
Well,
close
it's
today.
never
That's
touched 60.
1063 US dollars.
I take that back. It never. Oh, did it touch 60? Yes. At one point it did. I was in here. Yeah.
Right.
Yeah. I was in, and I finally let go around in this area. But this is Neo here, and we'll actually go to their page. And we'll break everything down and just
So
show
I
you.
think it's just very cool the experience you had in Seattle. You're at SeaTac, eh,
Yeah.
you're
Yep. See,
calling an Uber, and everything that pulls up is an
is
EV.
is
You get to your hotel, you call another Uber, it pulls up, it's an EV. Every time you call an Uber or taxi, it's an EV,
it's
and
an EV. It's an EV. Now
I think that's obviously absolutely amazing. Like it doesn't surprise me that Seattle is that type of city. Obviously, the
it's a tech hub. It's a nice
yeah,
little tech hub that's tucked away on the top of Boeing's out there,
yeah,
Amazon,
Pacific
Microsoft.
Northwest.
Yeah, I mean, lots of trees. Man, lots of trees.
I know.
When I was looking out my window, I was like, wow, that is a lot of trees. But
So I think I may have told you before. I lived in Vancouver for a long time, which is
mhm,
obviously just north of Seattle. I never actually did make it all the way down to Seattle, but I've been to Washington State many, many times. And yeah, like I've snowboarded at Mount Baker. I've been to Bellingham. I've probably been to other places around well, I know I have been to other places around northern Washington State. And yeah, I agree wholeheartedly. Like just and it's similar to BC, just trees everywhere,
yeah,
trees and mountains.
yeah, and just to just to throw a little other, little more sprinkle out there. I know that EVs are on the way. For those that are listening out there, they are coming. The competition is hot. Um,
Yeah.
Ford has got the F-150, GM, Buick, GMC, Cadillac. They have a whole line of EVs that they are planning to drop. They just released those. I've been keeping up with with all General Motors products and Ford, and
Right.
I'm into the automotive field,
Yep.
but they are coming hard. The GM is they are coming very EV focused. 10-year plan for them. So that's why when I'm thinking by 2025, the competition for EVs are going to be the next 3 years for that. It's I think it's going to be a change here. They're going to plan to
It's
come here 2025. Um, Ford and GM are going to continue to release products because they're all trying to catch Tesla. They're all trying to catch Elon. That's the guy with you know with every organ on his back. I feel sometimes, but he's
yeah,
doing.
so I think a couple of great points there. Obviously, Tesla is an amazing company. They do seem to be, sort of in that position of first in wins. They've been the one who have pioneered it more than anyone else. Obviously, electric vehicles and the idea and the concept has been around since the 1970s, but
Right.
Tesla finally came and brought it to sort of that Henry Ford level of mass production. And
Yes.
now the other companies, like you mentioned, the F-150 Lightning, the
The
Chevy
Mustang.
GMCs, they're all in this little position of sort of catch up now where, you know, GM and Ford and I guess others for the last 100 years, they were the leaders, no questions asked, right? And now they
Yes.
suddenly, very suddenly find themselves looking at Tesla as the leader, playing that little game of catch up. And
Catch up.
I think I think we would probably agree they will get there. Like I think both Ford and
Oh,
GM and the other major players are just too big to fail, right?
yes. Yes. I mean, you have to look at the amount of employees that work at all of these companies. You got to think they have the brightest minds at the top of the chain,
Right.
that are working. They're doing the behind the hours clocks on the newest way of making the smartest cars.
Yeah.
And be able to who knows, maybe these cars one day will be able to communicate via communications. You'll be able to provide it through your telecom. Verizon
Well,
AT&T.
I'm sure I'm 100% sure what you just said there is not too far off. That's like the near
I'm
future,
just
not the
I'm just
distant future,
I
right?
always think in my head as I'm just like I just sometimes think like, what if that, like, they make it a way like that, because everyone has a plug and play. Verizon needs CCI to give us phone service.
Right.
CCI needs Verizon to give us dividends. So it's like everybody needs somebody at some point as we as humans evolve forward. So the game is right now is just spinning. I'm just trying to find out all the eggs are gonna lay next.
Yeah. Yeah, I couldn't agree more.
Mm-hmm.
Oh, wow. So, I see we're coming up on nearly an hour already. This has been,
What?
an
It feels like it's
amazing
been five
discussion.
minutes.
What's that?
I said it feels like it's been 5 minutes.
Yeah, I know,
Let's
well
just get warmed up.
Oh, no, but thank you so much for your time. I really, really love your perspective on the automotive industry because I know you're in that industry. I really, really love your perspective on the EV portion of the automotive industry, and especially
Yeah,
what
and
you just shared about Seattle being, like, obviously a major early adopter in the EV market.
yep. And now back to your question with the Chargers. Now I know Seattle, you know, a lot of tech city. It's a huge tech city. Boeing's headquarters. It's a lot. That
Yeah,
means it's a lot of money out there,
right.
obviously. So I mean, some people may have these Chargers at their home.
I'm sure
Um,
most people do, like, if you're charging
mhm.
you would I would think that's part of it, right? You get a Tesla or Rivian F-150 Lightning, you charge it at home.
Yes.
But
Yep.
I'm thinking more for those road trips when you do wanna go from if you're going north from Seattle to Vancouver or south down to Portland, you need to find some places to charge along the way, right?
Exactly. Now name a company that has a charging contract, the gas provider.
Are
Neo.
there any?
Neo. The only one I know.
Neo is the one, so
The only one that I know that has a contract with the gas provider say, we'll allow you guys to pop up shop here. We'll get rid of
right.
our oil changing stops. We'll add the Neo battery swap here.
Wow, yeah, that's impressive. And that's where I see it going where, our gas stations, your Shells, uh, funny side note is we had Sunoco's here in Canada when I was a kid. We don't have them anymore. They got rebranded as either Shell or Esso or whatever else.
Mm-hmm.
Um, but either way, like obviously your big gas companies, they're still going to be pumping out the petroleum. They're still going to be selling your gasoline and your oil and whatnot.
Yes, yes,
But I really
yes,
do
we
see
can
them
do that.
needing to add the charging stations to their corner at, you know, 5th and Main or whatever. That's actually not a place that I know, but
Right,
you
right,
can picture a
oh,
gas station at 5th and Main, right?
right. No, I got you right there on the corner. No, 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 Fifth of May. No, I got you. And one more thing before we close up is it's obviously everyone's thinking like, oh, I can't afford an EV, or you have to think that they are in the game to make money, so they are going to find whatever way to make it affordable
Right.
to make the EVs. Now they are using all of the top recycled blah 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 materials. So, and it's not going to be much in the car because everything's going to be electric. So the car obviously may not cost as much. Some places you do get tax credits. Who knows if everyone will be getting tax credits
Right.
just for purchasing. So, it's all about being patient. This is not going to be an overnight thing. This is not going to be an 8-hour pot in the stew
No.
or 60-minute loaded and dryer. This is going to be like, yo, I am forgot all about that the EVs are here and here they are. They've
Well, and it
popped
seems
up.
like that's what's happened over just even though say the last 5 years. Like we knew EVs have been coming for a long time,
Hmm.
but just over the last, 4 to 5 years, all of a sudden, wow, there's a lot more of them. Like I said, my small city happens to be on a throughway between like some major cities like Detroit to Toronto, Toronto to Montreal.
Hmm.
But just the fact that you see those Teslas in that parking lot like 8 and 10 at a time, you're just like, holy wow. Like,
Yeah, yeah. It's like, oh wow, people have EVs like everyone's bought in.
right.
I call those early on. Those are early pioneers.
Early adopters, yeah, for sure.
Early. They're gonna those everyone that has EVs now they're already bought. They're gonna want the next one that comes out.
Right.
Go to
And I
some
think
dealers.
that's actually for another whole new podcast, but the used EV market is coming real soon too.
Mm-hmm. Yep, the used EV market, it's going to be huge. It's already huge in China.
Right.
Um,
And
that whole
it does exist already here, but here being North America, obviously Canada, US,
right.
and it does
Hmm.
exist already, but I guess my point is it's soon going to be a lot bigger.
Yes, it's gonna be huge. I'm excited, and being a long term investor right now, this is the best time to get in because you get to see a lot of transformation. Going to happen here. I think
Yeah.
of it as like us in the gold mine when you're like they found gold. It's like or the internet boom. Being happy. That of that time. So it's like we're here for the first EVs. You're gonna look back 20, 30 years from now and be like, wow, I was there
Right.
for the first EVs. I remember when it all started. So you know if that's your thing, I mean, this is a cool time to just kind of just catch along and read about all the stuff that's coming our way because you'll eventually see it in your driveway.
Cool. And we'll wrap it up there. Thank you so much for coming on the Passive Income Podcast.
Yes, of course. Thank you for having me.
If you're still watching or listening, and I hope
Hope
you
you
are,
are.
please be sure to subscribe. I really hope you did make it this far because that last 20 minutes was the best part of this podcast, talking about the EV market. And again, thank you so much for Dividend Dog on Twitter at the Dividend Dog.
Yes.
Thank you again so much for coming
Thank
on a
you.
second time to hopefully. I'm sure that was the only one that had a problem. So fingers crossed, this one will have no problems. We'll
Oh
get it
yeah, no,
uploaded, no problem, and
this one's going,
we'll definitely have
this
you
one's
on
going
again
for a
sometime.
Okay, awesome, Dave. Well, I thank you again. Thank you.